Hi guys, Dr. Justin Buerta, Tattoo Business Doc, our website www.tattoobusinessdoc.co.za. On the website you will find email addresses and contact details. There's a WhatsApp number that will be featuring soon that you can send your requests or your comments or your concerns, or if you think I'm a bloody idiot. Guys, I know I'm not the best in grammar, please do not kill me. I'm Afrikaans and I'm trying to help, and I'm trying to use small words, not big words. So guys, just hang in there. You know what? Yes, sometimes I talk fast, sometimes I talk slow. My hands all over the show. Tough shit. Right. Taxes. Now, March, April, May, June is very hot time for taxes because new budget comes in, law changes, all sorts of stuff coming into the play, especially from the 1st of April. And guys, there's a lot of things that we need to look at. First and foremost, loan accounts. Now, loan accounts, you'll have loan accounts between shareholders, directors of a company, and loan accounts with staff and other loan accounts. Now, there's a pitfall with loan accounts because if you owe a business money, you need to pay that back plus interest. People don't understand. Everybody thinks, we can do these interest-free loans and all these kind of things and special payment arrangements, this and next thing. What you got to understand, guys, this needs to conform in terms of National Credit Act. And SARS also wants to see that it's an arm's length transaction, or you will incur unintended tax consequences, be it maybe a donations tax and a 7C or something in that line, when we come to trusts and people giving, you put a property in a trust and then there's a loan account, all those kind of things, and you say, no, it's a tax-free loan account, but that's donations tax in the trust's hand at 45%. So, it's 20% donations tax, but you just need to be very careful. The main thing with loan accounts between shareholders and directors to business, both ways, guys, make sure it's an arm's length transaction. Now, the interest rate is a bit of iffy, but but a 1 or 2% interest rate, that's not going to fly. When I've dealt with the international loan accounts between the subsidiaries here, with the head offices being Spain, Germany, UK, wherever, the Reserve Bank didn't accept interest-free loans because then they said no, that's not it. So, and SARS more or less likes having 8.25% as the interest rate, so that you don't attract the nation's tax kind of scenario. There's also a lot of misconceptions, guys. Do not think that when you write off one of your staff members' loan accounts that there's no tax consequences. There is for them, because that's then a benefit and they've got to pay their fringe benefits taxation on that. Also, make sure if you're a director or shareholder that your loan accounts stay in the credit side and not in the debit side. It's never a good thing to owe your business money, because SARS will turn around and say, right, that's dividends tax because you've taken future profits. Be careful. And if that's the case, for 28 or 27% company tax plus 20% dividends, that's 47% tax that you've paid for the money that you loan. So guys, be very careful, please. It's a dangerous little pitfall, and SARS are very awake in terms of loan accounts, so do not fall into that thing. Okay, loan accounts, 7C, guys, trusts, I don't advocate for trust because there's so many pitfalls. So there is a lot of things. Obviously there was rates of monetary amounts that was amended. Obviously, if you look at the capital gains taxes, everything was lifted, your tax-free investments, all those kind of things. So those amendments come into effect the 1st of April as it goes through Parliament and everything else. The VDP, the Voluntary Disclosure Program, has now been extended in terms of the customs and excise side of things, because obviously there is issues there as well, which comes from way back. There's also a lot of changes in terms of VAT, as we know, deemed services and goods supplied. Business got to just be very mindful also, because there's been things about low value importation of goods, and the supplies educational services, VAT treatments on airtime vouchers supplied in the Republic for exclusive use in an export country. So there's a lot of treatments, and SARS have issued a bunch of interpretation notes, and you can go to the SARS website, www.sars.gov.za. You can go and look for these interpretation notes. Now it's brilliant, because the interpretation notes explains to you how SARS will approach certain amendments, how they approach certain sections of the laws, because a lot of sections of the laws remains mute until used, and then it's open for debate, open for you to interpret. And the problem with that is you use your interpretation because you're looking for the best scenario for your client. Oh, sorry, hell, we still got the props going here for the estate planning team. Good Lord. You must be looking at a box of ash and then thinking, hell, I'm going to be dead with all these tax changes. And that's bloody true. We're about to be taxed today. So, guys, there's a lot of things. I mean, taxation of crypto assets and the reporting framework. You know, and yeah, again, if you haven't disclosed it prior, you're going to have to go through the voluntary disclosure program. And there's also a lot of rules and regulations there because the person's trying to just avoid the penalties that will be imposed because you didn't come clean. So a person's got to be, yeah, just be careful. And I have done a section about the VAT changes to 2.3 million, and I've given you my personal view on it. So that's up to you. You know, there's private binding rulings. That is again where people were having an argument with SARS, and then you know you gotta, yeah, they make a ruling, but it's not really a binding ruling. But it is a binding ruling, but in that private kind of setup, it's a weird way of doing things. But premium paid for right of use, residential accommodation, rehabilitation of mining property, and the whole also qualifying interest with regards to asset for share transactions. Asset for share transactions is something that I haven't seen in a long time because it's always been a terrible mess. And I always tell the guys, listen, you know, but it's more for guys with listed companies, stuff like that. And if you create trust for your employees to own shares in the business, this, that, and next thing. So, I mean, it's not for everybody. If you want to know about that, you can go and read on the SARS thing. Again, what we've got to be mindful of again here is, and this has been coming up quite a lot, is that when we do your registrations on SARS e-filing, we now list the company's directors as the responsible vendor and the responsible person. Because most of the times we would load as tax practitioners our details, but that now binds us to your company, where if you screw up, we're the ones responsible. So, I mean, and that's unfair. You push the button to pay your taxes. So there's a lot of things to come out of there. So there's going to be a massive shift where tax practitioners they'll still take on the responsibilities as tax practitioner, but you as a vendor and representative for the company will be primarily loaded onto the system and no longer your tax practitioner, because you as a company owner or shareholder director is jointly and severally liable for the debts of the company, and that includes SARS. As such, your personal details will be loaded as a tax representative and not necessarily your tax practitioner. Now, obviously, there's been a lot of feedbacks from SAICA. SARS noted that there's chaos in some instances, trying to get verifications done, trying to get your VAT approvals through. There's a lot of bottlenecking in the systems, and it's just basically because they move people around terribly. You know what? And you know, yeah, from January, February, March, they move most people in tax collection. So you'll find people that do other things in SARS having to stop what they're doing just to go and collect taxes. So they know there's a lot of things that's behind. It is a circus. I mean, objections are behind where they've got 90 days to look at it. They don't get to it. And all sorts. There's been changes to the diesel in terms of what the farmers and the guys that's got the diesel grants where they can go and claim back for cost of diesel. There's changes there and limitations being brought in and. So what you've got to understand from this month is that the trust penalties for non-compliance will only kick in as of the 4th of May. And SARS will issue a penalty assessment if your trust income tax returns are not submitted, and they will not write back the penalties they have warned. And then, yeah, there's some changes in terms of the income tax exemption of bargaining councils and all that. So I think we have spoken about the trusts and we have spoken about PASIA and all those kind of things, and I have spoken about the 2026 budget. So there's nothing really new in April, just a bunch of hogwash and a lot of interpretation notes, which is really been available. And guys, it's very easy to read. So if there's a specific question you have and you don't necessarily have someone to answer it for you, SARS does try and answer the questions in the interpretation notes, and that normally also comes out after there has been court cases. So then SARS just either affirms or denies how they apply things. So guys, I have you back. Everything will be okay, and we'll chat again a lot about tax.